Hey everybody. The question that I got a couple times recently was, how do we get paid at Leading Edge? And the question both times was asked in this way. They said, all right, you're giving me this advice. And I say, yeah. And they say, well, how might financial incentives influence you to give me a decision that might not be in my best interest? I appreciate the question. And so you can ask us anything. We'll try to give you our best opinion. So what are our financial incentives to give you the advice we're giving you? It's an extremely fair question. LeadingEdgePlanning.com, if you go to our FAQ, which is frequently asked questions before choosing an investment advisor, you will see that that's one of the questions we recommend that you ask people if you work with us or any financial planner. 92% of the people out there, that number is close. So please don't ask me where I got the number from. Maybe it's 89% now, but they, either them or their companies, get paid a commission based on what you're invested in. We are fee-only financial planners. So fee-only means we only get paid from our clients. So, for example, a commission-based person may be thinking, well, if I move them from this mutual fund because it's now too aggressive to a safe mutual fund, they will get paid another 5% if it's an A share. They will get paid again. An upfront commission, and then also with the mutual funds, if they sell the mutual funds, they no longer get what's called a trailing commission. It's 0.25%. They no longer will get that. So that could be the incentive for keeping you invested. But again, at Leading Edge, if you're invested in cash, if you're invested in bonds, stocks, gold, but if you're invested in anything, we get paid based on your asset value. So over the last number of years, asset values have gone up. We have gotten paid more. If asset values go down, we get paid less. But we are on the same side of the table, whereas if your balances are falling, and the question we've been getting tremendously, which we've answered on another video, hopefully we can link it, but the question we get asked is, my balances are falling, investments are falling, markets are crashing, I want to get out now, go to cash, and then get back in later, okay? That's the question, and it's a very fair question. Boy, it does seem like markets are going to get worse before they get better. So now come to Leading Edge Financial Planning. If your account balances are falling, and they continue to fall, our revenue goes down for every dollar that goes down in your accounts. So we are down somewhere around 20% from the high, maybe a little bit more. I haven't checked the number once, but I just kind of have a feel for it about how people are invested within our company. But the reason why Charlie and I believe it's the right thing to do is because of our training to stay invested, although in the short run, your balances may go down. We also may get paid less. So let me give you a little bit of insight about Charlie and I that, some clients are new. I was a financial planner in 08-09 with the great company of Patriot Investment Management, really good people over there. I met Charlie at Patriot. I don't know, he worked there for a number of years. He's worked as an advisor, but I went through the 08-09 crash, and it was tough. Now, most of the people that were working with me were either close family and friends. And you talk about, your father calling and saying, hey, I'm down such a percent, and I love you, son, but do you know what you're doing? And then the people at Patriot saying, Mr. Gormley, here's what we believe, and here's why we believe it. So we will not get paid if you terminate the relationship with us, and that is always something that you may do. So anyway, what ended up happening after 08-09 is balances went down, and then they came back up, and they whipsawed up very quickly at the beginning, and then, anyway, everything turned out well. And we kept rebalancing every year, so people were selling their stocks and living off their stocks. It was a great decade. So that is what I believe will happen again, is we will go down, but eventually there'll be a price where there'll be buyers. I mean, that's what we call the efficient market hypothesis, is every day there's people that are buying and selling. Eventually people say, well, good Lord, these prices are great. This is a great opportunity. Let's buy. And that's what eventually will drive the prices back up, number one. Number two, some companies will go bankrupt, but if you own all the companies, there will be companies in 2021 that do things that we have no idea that they could do, and we are going to own those companies on the way up. So So that's my background. Charlie's background, the joke that I've heard from a number of airline pilots, we work with about half our clients are airline pilots, is how do you know someone is a fighter pilot? And the answer is they will tell you. Now, Charlie doesn't do that. Now, I usually brag on Charlie and tell everyone he's a fighter pilot. I think in this moment in time, it's extremely important that you know that, because Charlie served for 10 years as an officer and an F-16 fighter pilot, and our decision making, the value that Charlie has brought to me as an individual and a planner has been tremendous, because Charlie has been trained to act under stress. I mean, that is something that Charlie does. He acts under stress because his training as a fighter pilot, if you do not act in the right way under stress, not only will you kill yourself, but you will kill other people in the air as well as those that you're protecting on the ground. And so we talk a lot about mental models, which is a Southwest airline idea about decision making. We talk about constructs and infrastructure on how to make decisions under uncertainty, because that is what fighter pilots do. We talk about, as a financial planner, we talk about what is the mission. Okay, the mission is not, for most people, the mission is not to 2020 sell all their stuff and spend the money. The mission is typically to use that money in the future. So that's the one time I'll get to at the end where you may want to sell, is that if you've made a mistake and you put money into markets that you actually have to spend because you're no longer working or there's some other need. But so anyway, the mission is not 2020 with dollars that are invested. And that's something that it's hard for us to focus on. But again, the fighter pilot focuses on what's the mission. Charlie says that anybody can fly the plane. It's flying the plane in the right way and also engaging the systems that you need to actually complete your mission. And for those of you that are pilots, I apologize if I butchered that, because I know so much less about this than you do. But the mission here is for your stock investments to grow over a long period of time. That is the mission. Now, in 2020, does it matter if your stocks are down? Well, yes, it's discouraging. But if the mission is long-term, it's not something that will destroy your plan. And that's the reason why we believe it's best for you to stay invested. So let's talk a little bit about the one time where there's somebody around the country that we work with. They put their money in equities. They don't have emergency funds. And look, we're not going to condemn anybody for this. We understand. We work with a lot of people. A lot of people don't have emergency funds. So what do you do if you don't have emergency funds? Well, if you're in target date funds, if you sell a target date fund, you're selling stocks and bonds. If you're in funds that have stocks and bonds, you can go ahead and sell the bonds and the cash right now if you need to spend that money. That is a time where we think, yes, break the plan, okay? And go ahead, if an emergency, and figure out the pools of capital that you have that you can use. It might be from your accounts. You might have to. But to sum this up, the reason why we give the advice to stay the course, our financial incentives are aligned with you in the fact that when we give that advice, we give it because we think it's the best advice from all the evidence and our training. So thanks so much for watching. If you have questions, please give them to us. If you want to continue to get the videos on YouTube, please ring the bell. And anyway, things will be much brighter in the future. Anyway, hope you're all well. Take care.